Good evening, everyone. Hope you all are doing well. So, F7 students, in today's lecture, we will solve further 5 questions of section A from the Kaplan kit. In the previous lecture, we have solved first 5 questions of the section A from the Kaplan kit. Now, moving forward, we will start with the section A question number 6. Let's read the MCQ number 6. Which of the following properties owned by Scoop would be classified as an investment property? Before reading the answers or the options, let me tell you what is an investment property. IAS 40 is the investment property standard. If you have not watched this lecture, then go to the ACCA PassPoint channel and in the SPRF7 playlist, you will find this lecture in which I have explained each and everything which is very important. Now, what is an investment property? Investment property means a property which you have acquired for the earning rentals or for the purpose of capital appreciation. Means, let's say you have acquired a property and that property you have rented out, and the rentals you are earning is your investment property income. Now, also, you have a land or a plot which is not in your use, but you have taken it for the investment purpose. It means once the market value will go further high, then you will sell it. So this is for the capital appreciation, means capital gain. Now read the options. Option A is about a property that had been leased to a tenant. Means first it is leased out, it is rented to a tenant. Why we are not using the word rent in this case? Because it's for the longer period, so that's why it is for the leased. A property that had been leased to a tenant but which is no longer required and is now being held for resale. Now, guys, the important point here is to note about the resale. Resale means it's in the ordinary course of business, so it is treated as per IAS2 inventory. This question examiner can ask from the IFRS perspective as well. The same option can be given to you in the IFRS 5 option as well, in which you have to choose either this treatment, this option is as per IFRS 5 or not. No, this is not as per IFRS 5 because you have to focus on the word resale. Resale means the client, the entity, the scope limited has already been involved in these businesses. So it's an inventory, means buying and selling. Now, option B, land purchase for its investment potential. Okay, this is kind of investment property. Let's read further. Planning permission has not been obtained for building construction of any kind. The first point shows that this is for the investment potential. The second point shows that the construction permission has not been obtained. So, do you think it's mandatory for the investment property? No, it is not, because we have studied the investment property is to earning rentals and capital appreciation. So in this case, if we are not getting a permission for the construction, then still the property is for the capital appreciation as well. So this is the option B. Let's read the further options. Option C, a new office building used as Scoop's head office, means used by the entity, used by the owner, purchased specifically in order to exploit its capital gains potential. So now the second point further mentioned that it is an owner managed property, so it's not covered under the scope of IAS 40. If you watch the IAS 40 investment property lecture, in which I have given a separate sheet when and how the property will be treated as per IAS 40, as per IAS 2, IFRS 15, IAS 16 and IFRS 16. So now you guys can understand the importance of the IAS 40 lecture. Now the last option, option D, A stately home used for executive training. It is also owner occupied, means owner use, so it is also not an investment property. These last two options will be treated as per IAS 16 property, plant and equipment. So the answer of the question 6 is option B. Option A is the IAS to inventory. Now, IAS 40 investment property, refer YouTube channel ACCA PassPoint for complete lectures. Answer is B. Investment property means property held for rentals or capital appreciation. Now, there are options in which I have written the explanation for you. Option A, no, because it is treated as per IAS to inventory, keyword is resale. Option B, land held for capital appreciation investment property regardless of planning permission, means you do not need a permission. So it's correct answer. Option C, no. Why? Even if potential capital gain exists, the building is owner occupied used as head office. PPE IAS 16, not an investment property. Option D, no, used by the company owner occupied PPE. Now guys, we have solved question number 6. If you have any issues or any doubt, please feel free to comment down. Question number 6. During the current year, an entity had in place 1 million of 6% loan finance and 2 million of 9% loan finance. So this is some kind of IAS 23 borrowing cost, because we have understand by the term of loans and interest. Let's read further. It constructed a new factory which cost $600, and this was funded out of the existing loan finance. The factory took 8 months to complete. Now this is IAS 23, but still you have to hold. First read the requirement, then it will be more clear. To the nearest thousand, whenever there is a word to the nearest thousand, to it means you have to choose your answer specifically, mean it should be round about to the thousand. What borrowing cost should be capitalized? Now guys, it's 100% sure that it is IAS 23 borrowing cost. And as per IAS 23, interest cost should be capitalized. It should not be expense out. Loan taken to construct the qualifying asset and on which the interest should be capitalized. Qualifying asset means assets that take substantial period to complete. Substantial period, you can say 1 year. So this is IAS 23. Now, answer, you have to do the some working. Okay, guys. If you have watched the IAS 23 on the ACCA PassPoint channel, and if not, then go and watch that lecture. Now, in the IAS 23, there are two kind of borrowings, specific and general. There is an important hint for you. Whenever there are more than one loan, I am again repeating, whenever there are more than one loan, so it is a general borrowing. And in case of general borrowing, you have to calculate the average, weighted average interest rate. Okay, I am again repeating, you have to calculate the weighted average interest rate. Once you calculate the weighted average interest rate, then that interest rate will be applied on this cost in order to calculate the interest which should be capitalized. Now the question is how to calculate the weighted average cost, weighted average rate. Wait, I am here for you. Now guys, two loans given, so general borrowing. Calculate weighted average rate. Let's say loan A and loan B. Loan A amount is 1 million, loan B amount is 2 million given in the question. Now interest rate for the loan A is 6%, loan B is 9%. Interest cost, just multiply both. 60,000 multiply these two, 1,80,000. Now average rate is, how to calculate the average rate? You have to add both these figure. In the numerator you will write the interest cost, and in the denominator you will write the total of the loan amount. I am again repeating, in the numerator you have to write the interest cost of loan A and loan B. In the denominator, you have to write the total amount of loan, which includes loan A and loan B. You will get the average rate. Now, the average interest rate is 8%. This should be multiplied with the 6 lakh. But wait, guys, it's written that the factory took 8 months to complete. So you have to capitalize the interest of the 8 months because factory complete in 8 months. Now interest cost, capitalize interest cost 32,000. So your answer is 32,000. How 32,000? 8% is the weighted average rate, multiply by 6 lakh is the cost, multiply by 8 divided by 12 because we have to capitalize it for the 8 months. So now guys, we are also done with the question number 7, which is about IAS 23 borrowing cost. So now guys, there are students who suggest and even ask that we can escape IAS and IFRS lecture and directly jump to the consolidation and financial interpretation. Yes, for the financial interpretation, you can watch that lectures. But for the consolidation and for the financial statement, it's a big no because you can't calculate the adjustment in the consolidated statement of financial position and in the statement of financial position. So guys, please be active if you are preparing for the December 25 and for the next year intakes. Now guys, we are also done with the question number 7. Now we have question number 8. This is about the true and false. Which of the following statement is correct? Statement number 1. If the revaluation model is used, this is about the IAS 16 revaluation. There are two measurement, cost and revaluation. Initial is the cost and subsequent is the fair value or revaluation. Statement 1. If the revaluation model is used for property, plant and equipment, revaluations must subsequently be made with sufficient regularity to ensure that carrying amount does not differ materially from the fair value at each reporting date. No guys, this is incorrect. If you remember, when we calculate the fair value gain means revaluation gain or loss, we compare it with the fair value and the carrying amount. So this is incorrect. It should be like that to ensure that the carrying amount does differ. It is written does not differ, then it is incorrect. So you have to write in the false column. Okay guys. Statement number 2. When an item of property, plant and equipment is revalued, there is no requirement that the entire class of assets to which the item belongs must be revalued. If you have watched the previous lecture in which we have covered 5 questions from 1 to 5. In that lecture, I have also mentioned that whenever entity decides to revalue its asset, then it is mandatory to revalue entire class of assets. If an entity chooses to classify one asset, two asset, and the remaining asset chooses to classify on the cost model, it is incorrect as per IAS, IFRS. All class of assets should be revalued or all class of assets should be recorded on the cost model. So statement. Okay guys, in the statement 1 I have made a mistake because I have read it incorrectly. It is written that revaluation must subsequently be made with sufficient regularity to ensure that the carrying amount does not differ materially from the fair value at each reporting date. Yes, it is correct, so it is true. In the answer I have changed the statements. So don't worry, while I uploading the PDF file on the drive link, I will change the answer. So statement 1 is true. Why? When the revaluation model is used, revaluations should be made with sufficient regularity to ensure that the carrying amount of the assets close to the fair value. So that's why statement number 1 is true. It's not false, it's true. Now statement 2 is false. Why? Because if one item in a class of asset is revalued, then all the assets in that class must be revalued. Don't worry, I will change it while uploading this slide on the drive link. Now guys, question number 9, please be attentive. This is very important. It relates to IAS 40 government grant. Now, total company received a government grant of $60,000 on 1st September 2004. The conditions of the grant. Now, these are the conditions. If the condition did not meet, we learned in the first lecture of the Kaplan kit questions that if the condition did not meet, then the grant should be reversed. Now, the grant state that Pootle company must employ a local worker. So this is a grant related to income. We have studied that there are two kind of grants, grant related to assets and the grant related to income. Must employ a local worker on a full-time contract over a 5-year period. Pootle company expects to meet the conditions of the grant. So now it's clear that the grant condition should be met. So Pootle company can recognize a grant. The full grant has been recorded as other income for the year ended 31st December 2004. Now guys, Hotel company can recognize the grant but not the full grant in the year ended 31st December 2004. Why? Because the grant received on 1st September 2004 and you are doing the accounting for 31st December 2004. So from 1st September to 31st December it becomes 4 months. So only 4 month income should be recognized. So there is an overstatement in other income. We should have to make the correcting entry. Okay guys. What is the adjustment? What is the adjustment required to account correctly for the grant as at 31st December 2004. Now account name, value, debit, credit. So one thing you have to debit and the other thing you have to credit. Now guys, what is the entry when we receive the grant? Whenever we receive the grant, the entry we made is bank debit, deferred income, credit. No need to change this entry because it's already cleared. It's already done. It is correct. Now the incorrection, now the unadjusted entry is the full grant has been recorded as other income, means there is an overstatement in the other income. Now, when we recognize the grant, what will be the entry we made? We made deferred income debit because we reduced the liability and in order in the return we book the income, means whenever liability is amortized it becomes income. So deferred liability, deferred income debit and other income credit. So this is the correct entry. But what the Hotel company made in this case, they recognize the full grant. They should recognize the grant for the 4,000. But what they did, they recognized the grant for the complete 60,000. So now guys, what should you made? So you will make the overstatement entry which is other income debit because you have overstated the other income debit and deferred income or deferred liability credit because it's a liability on you which you have to reverse. So that's why you should reverse it. Now this is IAS 20 government grant. This is grant related to income. As portal company recognize full grant as an income is incorrect. It should be time apportioned for 4 months in 2004. Other income overstated by 56,000. Correction entry. Other income 56,000. Deferred income 56,000. Only 4,000 grant should be recognized, but the portal company recognized complete 60,000 grounds, so it is incorrect. That's why you have to make this entry. Other income 56,000, deferred income 56,000. Now you can also ask how to calculate the 56,000. Look, you have total grant amount is 60,000. The grant date or the life is 5 years, so 60,000 divided by 5 multiply by 4 divided by 12, you will get the 4000, which is the correct amount which portal company should recognize for this period, but they have recorded the complete 60,000. So 60 minus 4 is 56, which is the overstated amount, so that's why they have to return it. Now guys, this is the last question of today's lecture. Please be attentive, this is very important. There is a little bit trick in this. Tibet acquired a new office building on 1st October 2004. Its initial carrying amount consisted of land 2000, building structure 10,000. These are the carrying amounts. Air conditioning system 4,000. Now, guys, the estimated lives of the building structure and air conditioning system are 25 years and 10 years respectively. Where is the life of the land? How can we depreciate the land? Oh, please, we can't depreciate the land. If you are going to depreciate the land with the life of the building, then the examiner will call you again. So please be attentive. When the air conditioning system is due for replacement, when the air conditioning system is due for replacement, it is estimated, it's not final, it's an estimation, it is estimated that the old system will be dismantled. Means this one, it is estimated that this system, this air conditioning system with the carrying amount of 4000 will be in the future dismantled, means discarded and sold for 5 lakh. This is not the disposal proceeds, this is the residual value. Again repeating, this is not the disposal proceeds, this is the residual value. It means it is estimated, means we are estimating that the old system, that this system will be dismantled and sold for 5 lakh. At the end of, let's say, after 5 years, they will dismantle. So after 5 years, the value of this old system will be 5 lakh. These figures are in the million and this figure is the 5 lakh. So it's a residual value. Now, depreciation is time apportioned where appropriate. At what amount will be the office building be shown in Tibet statement of financial position as at 31st March 2005. So you acquired at 1st October 2004. So from 1st October to 31st March, it becomes 6 months. So land will directly go in the SOFP at 2000. Building structure is the 10,000 at 1st October 2004 and the life is 25 years. So you have to depreciate it by 6 months. 10,000 divided by 25 multiply by 6 divided by 12, you will get the 6-month depreciation. 10,000 minus the 6-month depreciation, you will get the carrying amount at 31st March 2005, which will be, I guess, 9,800. Now, air conditioning system 4,000 is the carrying amount. You will calculate the depreciation to arrive at the 31st March 2005 value. How to calculate the depreciation? It's so easy. Don't get confused with this 5 lakh. It's a residual value. 4,000 minus residual value of 500 divided by life 10 year multiply by 6 divided by 12. You will get the depreciation of the 6 months. So that 6-month depreciation from will be deducted from 4,000. You will get the carrying amount at 31st March. So here is the explanation and the answer. This is IAS 16 PPE. Option A is the answer, which is 15625. SOFP amount 2000 of land building 9800. How 10,000 is the carrying amount at 1st October 2004 or 5, whatever it is. So 10,000 divided by 25 is the life, multiply by 6 divided by 12. You will get the depreciation, which is 200. 10,000 minus 200 is 9,800. Air conditioning depreciation I have done here. Cost or carrying amount 4,000, depreciation 175. How 175? 4,000 minus residual value 500 divided by 10 life. You have to calculate it for the 6 months. So 6 divided by 12, you will get the 175. 4,000 minus 175, you will get 3,825. So you have written here. So the total is 15625. Let me show you. So your answer is option A. I hope guys you are getting it. I tried my best to explain the concept with each MCQs. So again, if you are facing any issues or any difficulty, please try to comment down, or you guys can reach out to me. I have a separate group for the F7 students as well. So best wishes and take care.